Hey guys, welcome to Tim and Helen's Wine About Real Estate. As you can see today, it's just going to be me solo today. But we have Daniel, who has been our number one requested person to come back on our show, here to talk about taxes. Personally, I think that's one of the most boring subjects, but we have someone who actually loves this topic, and we're excited to ask him some questions today. All right, Daniel, I joke. It's not the most boring topic, but it is a very important topic, and you make it a lot of fun. So thank you for saving a lot of our clients money on taxes and stuff like that. But let's talk about this, because, again, there was a lot of follow-up questions. I know that you were bombarded with some of our clients asking you questions about taxes in the real estate world. But what are some changes, and what are some of the itemized deductions that are allowed for 2022 and for homes?
Yeah, of course. So what we're going to go ahead and talk about first is, of course, going to be the itemized deductions for if you have a primary home. So remember, when you do taxes, there's two different ways you can take a deduction. There's always your standard deduction, and there's your itemized deduction. Standard deduction, if you're single, I'm just going to use rounded numbers here for examples, but it's about $12,500 if you're single.
Okay.
If you're married, of course, double that, it's $25,000. Now, if you own a home, that's where actually home ownership actually helps from a tax perspective. From there, you can always go ahead and take out your mortgage interest, you can go ahead and take out your property taxes, and anything else that there may be. The big trick to the itemized deduction, though, is you want to trigger enough of the itemized deduction. It's very hard now, since after 2018, they went ahead and doubled the rates. But if you can trigger it, it also triggers on the state level as well. Thereby, you save a lot of taxes from the state, from your associated state that you live in. Now, one other thing that we didn't talk about for the itemized deduction is you can also go ahead and deduct out the interest on any home equity lines of credits. So let's say you're trying to buy a new house, but you're not trying to sell your current home until you get the first home, of course. Get a HELOC, go ahead and convert that over, buy it, all that interest until you actually sell your original home, right? Of course, that's going to help you with your taxes as well.
Wow. Okay. So I just heard there's so many different ways to save on your taxes. But since you handle the taxes anyway, you always figure everything out. So leave it to the experts on the itemized deductions is what I'm getting at.
We will take a look at it.
There you go.
We'll see how we can help.
All right. So what is this primary residence exclusion that I've been hearing about?
Primary residence exclusion is a very well-known topic, but it's well-known because it's one of the most important topics. From my experience with my clients, that how most people actually generate wealth is actually buying appreciating assets, primarily their homes. Now, in the United States and most countries around the world, there's something called capital gain tax.
Sure.
Usually, if you buy or sell something that's not regularly your income, so some sort of asset, you get charged capital gain tax. However, for, of course, the United States, if you live in a home that's declared your primary residence for the last 2 out of 5 years, then there actually is no capital gain tax up to an extent.
So this is why we always say keep it at least for 2 years if you don't want to pay taxes on the property.
Of course.
Aha. Well, what about converting? what happens if you convert your primary to rental?
Well, that's going to be very interesting, and this is going to be a good segue into part 2, which is for next week.
Yes.
Now, this is actually taking advantage of that primary residence exclusion. So let's say you bought your primary residence for $100,000 back in the day.
I wish there was $100,000 properties, but okay, yes.
They are not, but in this hypothetical
back in the day
scenario. So $100,000 back in the day, right? And you want to convert this to a rental. Let's say you sell this 20 years in the future, it's worth $1 million now, right?
Okay.
Capital gain, you haven't lived there for a while, it's a rental, right? So it's $1 million. Simply put, it's $1 million minus $100,000. So you have $900,000 worth of gain.
That's a lot of taxes.
But let's say right now, same thing, you bought it for $100,000 back in the day, but right now, with all market comparables and everything, it's worth about $600,000. What you would go ahead and do is you would go ahead and sell the home to an LLC, which is a separate legal entity that you own by yourself, and it's owned 100% by yourself. From there, you actually step up the basis from $100,000 to $600,000. That transaction isn't taxed because you get the primary residence exclusion, since you did live there. So right when you're converting that actual property, when you sell it later for that $1 million, instead of getting taxed on $900,000, you get taxed on $400,000.
That's amazing.
Yeah.
Okay.
So that saves you.
That's a lot. That's a huge tax basis.
That saves you what, $50,000 at least.
I had no idea that even existed.
Yep. It's a huge loophole. No. Well, let me take that back. It's not a loophole. It's actually very clear by the book. But if you do want to actually structure that deal correctly, I do definitely recommend speaking with your tax advisor. It's a little bit more of a complicated deal structure you have to do.
All right, so we're going to talk a little bit more next week on our next show. But Daniel, how do they get a hold of you? Where are you based, and how can they get contact information?
Well, my headquarters is actually in Atlanta. It's actually in Duluth, but the best way to, of course, contact me is by contacting me directly. My direct phone number is 678-662-3244.
All right, and if you have any questions, you can contact me or Helen, and we'll definitely get you in front of Daniel to help you out with all that stuff. So, all right, tax season's coming up, but all right, you guys, part 2 coming up next week.
All right,
Bye,
thanks.
guys.
Have a good one.